Well, welcome back, and welcome back to the view. Last day here in Hua Hin, Thailand, so I thought I'd bring you the view. Before we get into the topic of the probability of a crash creeping up, if you guys are interested, this is the Hilton at Hua Hin. Pretty nice place, a bit run down, but you don't really get much here in Hua Hin. Bit of an older place of Thailand. As per usual, I've got heaps to get through in today's video, so I'm going to bring it back to the charts on the computer, but I thought at least started out with something a little bit different because I'll be in Bangkok after this, and I'll do a few videos from Bangkok before we head back to Australia after the massive wedding we had last week here with Ravi and Sanjana. So, probabilities of a crash increasing. Like, subscribe. Let's get into it. First up, I thought we'd start with Bitcoin and have a look at the data, the market sentiment, and the liquidations here for the crypto space. The last 24 hours has only seen about 240 million, so basically just short of $250 million in liquidation. And as you can see, over the last several days, it's basically been pretty damn low this entire time. On the long side, the green side here, 120 million, 170 million, 200 million, 40 million. There's really not that much energy or that much interest in trading crypto in the markets since the fateful dump of 9 days ago now. We're looking at that $2.2 billion liquidation 24-hour period that we experienced about 9 to 10 days ago. And since then, things have gone pretty damn quiet. We can also see it with the daily exchange volume. So this is obviously the liquidations. And if you're not getting too much liquidations, well then it's just natural to see that the exchange volume would also be down. Now this is a 7-day moving average, something that we cover nearly every single day here on the channel to give us a gauge of whether we're starting to see more interest come back into the market or not. And so far, I mean, at least over this bull market since we've been following this, it's done very, very well to help us identify whether we're starting to see that interest come back or if it's starting to die out. We're kind of in a middle period here because, well, we haven't broken down from the $50 billion. We haven't got back to the previous lows of $30 billion, but we're not back at those highs of $130, $120 billion either. So we're in this sort of middle period, but you can clearly see the trends are down, lower highs, lower lows. The whole TA thing works, at least from what I've seen, it works on anything with a chart. So basically we're in a bit of a rock and a hard place, waiting for this to play out, waiting for at least another, well, I'm thinking there's going to be a dump here. But that doesn't mean that it's pretty crazy. It doesn't mean that you can't see a little bit of a pump, but I'll get to that in the charts as to where those critical points are, at least what I'm watching, where those levels are that I would expect the market to overcome if it's going to be a sustained pump. That's always the differences here, I think, with crypto space, whether you're on YouTube or on X or, I don't know, wherever else you like to digest the information out there, that people often refer to pumps and dumps or crashes and moonshots and all this sort of stuff. But it's like, well, where are the critical turning points? And that's what I find most interest in to understand whether this is going to be a sustained pump or a sustained crash, further downside. I'll get to that in the chart. I don't want to confuse things too much further here. So essentially, I'm seeing more weakness in this particular chart because there hasn't been higher highs continue to form with the exchange volume. Now, one thing to note, this is November. You can see the dates here, 11/16, November 16, the American way. That's the 27th, and then another peak here in December, so around the 5th, 6th, 8th. Those days were pretty high. And for BTC, they were also pretty high. So the 5th, that was a big liquidation day. You had a new all-time high, another new all-time high. The market was, well, that was an all-time high close, cooled off a bit and then pushed higher in those last few days there, the 15th, 16th, 17th. But on the exchange volume, 15th, 16th, 17th were dropping off. So that's another way to look at this to identify whether you're going to see a sustained move to the upside, because at the time for BTC, this was moving higher. This moved into new all-time highs, but the exchange volume was dropping off, which meant people were not as interested. Investors were not as interested. These were the very, very late buyers into the game, and they got wrecked straight away. And then our 3-day rule showed up here, or 3-bar rule, I should say, because it works across multiple time frames. You can use it on the weekly chart. This bar, and this bar, even though it's green, it was still down. Lower highs, lower lows. I'll talk about this now because it makes sense in the context. You had a slightly higher high, but nothing closed above those previous highs. So see where those closes are? So this rule, at least in my book, you're welcome to use it whichever way you want, but this rule still kept us safe and is essentially, I want to stop short of just saying it's still in play, but it's basically held the market down the entire time, barring a few dollars above the previous top, which was then dropped back, closed lower, another close here. I think it was on or very, very close to it, and the market never got back to that point. So this signal, this 3-bar rule, extremely, extremely important for Bitcoin. It said there was going to be weakness in the market. Yes, we saw weakness. Yes, we saw a pump, but it did not close above those levels. You did not see strong closes, and then it was a weak rally into that next top here at 107,000. Another weak rally into 106,500, and now we find ourselves down at $95,000. So that has been an absolute life-saving rule. So don't take it for granted. It's an extremely powerful tool. It worked in March. It worked again in December. Here you can see how it just goes a little bit above and then falls away from that point, and it's still in a bit of a weak zone. Okay, so some more things that I'm seeing in regards to the probabilities of a crash increasing here are the interests through Google Trends. So less people are searching for Bitcoin and crypto. I've got worldwide, I've got 5 years here, we've got Bitcoin and crypto. The volumes are now down to 24 for Bitcoin and 12 for crypto. The last times I saw that, you had to go all the way back to the low in October of 2024. You got Bitcoin at 17 and crypto at 8. So we're getting closer to those points, but we're not there yet. Ideally, we just start to base out again at those prices or slightly higher. You can see these previous lows in September 2023. So the year prior to that was around 6 for crypto, 6, 7, 6, 7, 6, 7. Basically that for months. Bitcoin was around 15, 16, little spikes here, 17 to 20, so on, right? And then here, Bitcoin was in the high teens, sometimes broke out to once to the 30s. That was when it dumped. But other than that, it was basically in the 20s or the high teens. And right now we see Bitcoin in the low 20s, and it's on its way down from that point. So more signals for that, but doesn't mean that I think the entire game's over yet because of where we sit with price. And remember, price is the most important. This just, to me, identifies whether we're actually going to see that follow through, whether any of that noise about pumps and dumps and is altcoin season over or is it starting or any sort of BS, is there any substance to it, or is that just talk for clicks and views? And I don't see it here. Just like what we looked at last year as well, when there was so much talk about gaming, at least online, a lot of stuff about gaming on YouTube or X or whatever, nothing followed through with that. Gaming, absolute dead narrative, at least from the data. That's what the data has shown so far. Okay, the next thing is the crypto fear and greed index, which is, to me, a big one here. The fear is at 46. Yesterday was 47. I had a day off yesterday. I was a little sick, so thanks for your thoughts. Anyone that was writing and saying I hadn't done a video in 2 days. Yeah, I had just like a 24-hour sickness, and now I'm feeling pretty good. I guess that's what happens when you travel to Asia. Okay, so we had fear, neutral, fear again. We can see this on the chart. This is basically one of those, a similar pattern to what we've been following over the last movement. You can see here in March to the downside into May. Remember, I still had to get through the idea of maybe we do see a bit of a pump, but what is a pump, right? So coming from the fear and greed index, where we're flatlined here in the low 40s, and it's just fear after fear after fear, just normal days here. This is the Bitcoin fear and greed index. Yes, it says crypto as well. You're free to use whatever index you want to use, but this has been the most reliable that I've found over the last several years, going back to 2020, 2021. Absolutely fantastic index. Anyway, the point I was trying to make here was the pump. Even if we see a basing out here and we see a day up, and it's like, well, I thought you said the probabilities of a crash were coming. yes, that's still probable. I would need to see Bitcoin's price break above this top. That's on the 3rd of February, that big dump and pump day. And the top there was 102,600. So for a round number, call it 103. And I want to see the pump get above there and sustain above that level, above 103. So some closes, another day's price action above there, some closes. Yeah, it can dip down intraday, but at the end of the day, I want to see the closes above those levels. And this has been a price range that I've had now on the chart for weeks. You guys that have been following, like, subscribe. Obviously, each of the day's analysis builds upon the previous day. I didn't get to that in the intro. But yeah, you don't want to miss out on the content when, of course, I'm here, I'm not sick, because this has basically kept us on the right side of the market. There was not enough consolidation above those levels through this period before it went underneath, tested it, and then basically broke down. So we have one close again at that point. It was all looking really damn good on the 3rd. It looked like it had some hallmarks to hold this market up. Now, it hasn't broken down from that low either. So we're still in this annoying grind phase, but you would want to see the market push higher at least the day after. So if you had an inside day here, you definitely want to see it push higher. This is what I'm referring to in case you need an example. See that in August, big dump down, still a lower close. It held above the swing bottom here, which is a strong sign. You had an inside day, so it's the market trying to figure out what the hell just happened. The next day, pushed a little higher, lower close again, but it pushed a little higher, and then we had a follow through with that following day on the 8th of August. So a nice push higher, and then started to consolidate above those levels. See those previous tops? It started to consolidate. That's what I want to see. Still consolidating, still consolidating. This one here scared a lot of the market out. You can see all the videos on our channel as well, as I was talking about that being a possible higher low with more fear in the game. You can see the fear down here. A lot of people getting very scared. They're thinking it was going to collapse again. It didn't. High lows, okay? You can see how we have not had that. We had a bounce, but then it's faded off very quickly with no real signs of it pushing higher. So if we do see that today and close above, that might get us into the books, right? The bulls back in the control of the price. But unless that gets above 103 and closes above, I think we're still on the side of the probabilities of further downside. Any sort of rejections here at 99, you know, today we go up to 99, today we go up to 100, 101 gets rejected, it closes back under 99. That's still a weaker look to the downside, which still is not the worst thing in the world. Okay, so to finish off with the Fear and Greed Index, similar sort of playbook to what we saw last year from March into July and August. You can see we had, look at these, peaks out, drops back down into that. This case was extreme fear. Here we're just into fear. We had 1, 2, 3, and then a higher low. So far we've only had 1, 2 major events into neutral and only fear. So just looking at what I've covered so far in the first 10 or so minutes of the video, it seems like we still have another event to occur to wash things out and really reset the game. 2021 saw a similar thing here. There's 1 big flush, 2 big flush, 3 big flushes, and then the wipeout game happened. There's your 4th, and then we're able to recover from that point. And so far, it still seems like we're just a little bit short of that, considering how far we've come in this bull market, being over 2 years now into this bull. So I'm going to flip gears here just a little bit. Now I've got the economic analysis and the traditional markets to have a look through, as we're still seeing some reasonable signs here of support. But I just wanted to give you a reminder, we have the Bluffin competition live now. It's a $100,000 giveaway exclusively for the Investor Accelerator. Link in the video description. Use the official links in the video description only. Do not get scammed out there. Don't be sending money left, right, and center to people you have no idea who they are. This exchange is a no KYC exchange. If that suits you, you can use that, of course. And for the Aussies, you've also got SwiftX as well as a bit of an on-ramp into other exchanges out there if you want to be doing different sorts of trading. So, of course, beware of scammers. These are all my official socials down here if you choose to follow them. My Instagram, which is new. I got a new one there, and Twitter. Okay, so let's go back to the data at hand, the economic announcements this week. There is some talk of the market basically waiting to see what happens with the CPI. the core CPI, the CPI month over month, the CPI year over year, the Fed Chair Powell testifying again, and of course Trump speaks. When does Trump not speak? I absolutely love it. I hope you're finding some pretty good takes from anything he's saying there. I think it's pretty good to have a president speaking all the time, whether you love him or hate him. Entirely up to you, but at least you're hearing from them day to day, right? So that's probably what the market is sort of waiting for in this trading range, as we'll get to in just a sec. For Great Britain, any of the Brits watching, GDP coming up month over month. You look like you're struggling here at 0.1, but your stock markets are hitting new all-time highs. US also has PPI, unemployment claims, core retail, so much coming up. Aussies next week, looks like we are going for a 0.25% cut, or at least that's what the forecast is. Let's see if we get it finally. Bring down some of our home loans, and then after that, we can revisit these things next week. But there is some economic stuff coming up, and the interesting one here is the unemployment claims. Now, that often comes up as a big reason why the market should collapse. Unemployment is rising. This is a fantastic article here. Unemployment as a stock market indicator. There is a ton here, and I'm not going to go through it because we would be here for another half an hour. I want to get to the altcoins for you as well. Unemployment is a key. So what we'll do is just go through key points. Unemployment is a key component of a strong economic environment. The economic environment is obviously an important factor for stocks, but only one of many. So it's not the only thing, which a lot of analysis I see out there and analysts weigh very heavily on looking at the economic data, or basically just the employment. Right? Continued claims is a useful data series for objectively assessing the state of unemployment. The economy remains less than it could be despite the low unemployment rate. Okay, so this has been down in an unfavorable zone according to this macro index model since 2022. Okay, so it's in an unfavorable state. You can see it's in red. We could go through and have a look at how this is calculated, but I'll spare you the details. And you can see we know the S&P 500 has been up since October 2022. It's been up. It's been a bull market since then. And you could even argue it's been a bull market since 2020 with a healthy correction and then another move to the upside. But essentially, very, very red, very, very unfavorable with the unemployment info here, the macro index model. Okay, so there is a lot to get through. You could pause this at any time, have a look at each of these graphs, but I'm going to go skip to the bottom to look at the summary on how we look at this and how we use it. So how do we use this data? If unemployment starts to rise, but stock prices are still in an uptrend, which they are, and we've seen unemployment also slowly rise, it's a model 2. You could read the rest of these, but I'll again spare you the details. The model reads are favorable at +2. So that's what this is showing. It's showing that we're at a +2, and essentially there's nothing to worry about. It is it's a time to ignore any negative headlines about rising unemployment. That's what the models have shown, and I tend to weigh on this thinking that it's pretty much going to play out yet again. So how does the market feel about this? Well, it's neutral. Previous close was also neutral. It's been in fear. It's been got extreme fear just for a day there back in December, so about nearly 2 months ago, and essentially has been climbing out of extreme fear. That was extreme fear back here. The price went slightly lower, so it was still in fear, and now we are within 1% of a new 1.2%, sorry, of a new all-time high. Can it go lower from here? Sure. But overall, this still seems like it still is a bull market, and it just seems like it's a trading range. I guess I could say again, this is a trading range. It's just grinding out here, waiting for the next steps from the market. And you can see it continues to get higher and higher. Even if we get some flush outs, I've talked about key support levels to the downside. 56 is a really big one for me. I've talked about 57 and then previous low here at 58. The market has shrugged off everything so far. It shrugged off week after week after week of tariffs. It's shrugged off DeepSeek, crashing the AI sector. I mean, that's just the recent stuff. So I can't see why people would still be waiting for a collapse from this point. And typically you don't see tops form on this bearish news, right? Every time it's dropped, the market has held the line and recovered from that point. And as I've pointed out with the monthly trend, once this becomes a little bit clearer and it just starts to get running again, typically that's when Bitcoin begins to run. Here's your 2020 to 2021 bull market. That's a really clear monthly uptrend. There was only a couple of swing downtrends, and then it continued higher. You didn't get any breaks in the monthly swing and just ran up. You have the 2017 bull market after it broke out in 2016, well, early 2017 into that top. That was basically just no breakdowns of the monthly low. There's the monthly low. So at the bottom of each of these bars, if you want your candles, here you go. At the bottom of the wicks, none of those wicks broke until the very end, when Bitcoin had already turned down. So it was just pretty much straight up for that period. And again, all the way back to 2012 into 2013, nice, easy move straight up. It ended roughly about there for Bitcoin. And then the S&P had about a year off, 2 years off, really, just going sideways. So 2014, 2015, and then started going again in 2016 after the election, right? So this, you can see now, it's been a bit of indecision here. And I think once this starts to clear up what it wants to do, that's going to become a lot clearer for Bitcoin. And then, of course, I believe that'll spill over for altcoins eventually. This one's just a quick one on the commodities. Trading day of the year, trading day 27 to day 110. Generally, there's upside. Average of all years, you see commodities head up. This is the XLE. Why is this important to us? I suspect we'll see further upside for commodities. As a very high level thing here, hit the like button. Upside for commodities, meaning we may see some downside for the US dollar eventually. Look at the dates here. 27 to day 110. That's a few months at least, probably 3 to 4 months, okay? So this thing takes some time. Downside for the US dollar, that eventually means good things for Bitcoin. I suspect we'll see inflation pick up again eventually. So maybe at the end of the year, maybe into 2026. Generally, we see inflation pick up when the economy is pretty strong and the stock markets are strong. And then that leads into the inevitable downsides. So I think this is all building towards that and that big 2025, even though quarter one, as we've been saying since quarter four last year, quarter one is that more difficult time of the year to be trading for this year, quarter one of 2025. It wasn't going to be as easy as the last 2 years when everyone thought there was going to be a recession. Winner's curse phase, 18.6 year cycle. If I didn't need to remind us again, things are still up, but it is very, very late in the cycle. I think it's an important one to remember as well, because we had the, Trump come in roughly around, here or so, 2024. Now he's here doing his thing, but I think this is going to lead to the inevitable end. Nothing against Trump and all that stuff that's going on. It could be very, very good, but where we sit in the overall cycle, and this hasn't changed in over 200 years for the US, probably not going to see some great things towards the end here. So we're looking between 2027 to 2029 and then start to work our way out of it. Okay, over to Bitcoin stocks and then to some of the macro stuff for BTC and altcoins. MicroStrategy, a big player here that we've been following to give us some leading indicators of the end of the cycle for Bitcoin. It probably sounds like I think the cycle is ending. It's not ending yet. This had a time frame. Let me just preface that. There is 273 days. That's what the last cycle did, from top to top. MicroStrategy put in a lower high, Bitcoin put in a higher high. We are only a couple of months into this. Where are we? 80 odd days. So just short of 3 months since that first top. Therefore, we might still have another 6 months left until the end of this. So that's where I'm heading towards here. But things are still playing out the same for MicroStrategy. No new all-time highs here, while Bitcoin has put in multiple new all-time highs, December, and January, and it's just been on a downtrend. USDT dominance is also moving higher. We are further away from the massive bull market mania here at 19% and closer towards the bearish side, roughly 14%. So that's where the closing price is now. These levels to the upside are the next resistance levels that I'm looking out for, roughly 5.2%. And this also comes off the double bottom, major double bottom here. This same pattern played out in 2021. You guys have seen me, if you have been following, very, very similar pattern at that top in 2021, and then led to a major collapse for Bitcoin and cryptocurrencies. And again, we're sort of in that same sort of playbook before we get to that point. Now, to the upside, the 50% levels, as I said, 5.2%, and the major one that we've been following here is about 4.8%. Double bottom extended to the 100% level is about 6.7%, and that's where this red, the thicker red line, is at 5.2%. So if we start to see failures there, rejections there, that is a good thing. So if we see this spike and Bitcoin and cryptos crash, the probabilities of cryptos that I'm talking about here, the crash sooner rather than later, like this short-term one, then that's where I'm looking for some sort of rejections at around 5.2%. If we get higher, let's cross that bridge if we get to that point. But for now, we're much closer to these levels, and of course 4.8%, then getting back to this F-off massive mania bull market, so still some more time to go. The total cryptocurrency market cap also holding its ground here at 3.1 trillion, but to the downside for the crash. In terms of the, like how far could this thing go? There's an 8% move to the downside there. That would lead us back to that previous low, but the 50% level is okay there at 2.7 trillion. So if a 12% move is not a crash in your books, great. If it is, then this makes sense to you. The only reason I call it a crash is because that would send shockwaves. It'd freak everyone out. I mean, people get freaked out over 5%. And what I'm talking about with the freak out thing is that you see a lot of interest in the markets at around that sort of 3 to 5, 6%. Interest meaning more eyeballs come, like everyone starts to click on videos at that time. Therefore, I'm very happy to call it a crash because people are interested. Like, why wouldn't they be interested? If it's not that big of a deal, why are they interested? Anyway, 12% to the downside would take you down to 2.7, and it's still in a relatively strong position. You're above the 50% level, and hopefully we get another bounce from that and everything turns out like it did in the previous move to the downside. For Bitcoin, those percentages are roughly similar from the current price to the lows there of 4%. So for the total crypto market cap was 8, but that's 4 there. Then to the next low is at 7, and to the 50% level here is about 17%. So yeah, you're bordering on the line there of crash if it happens to be 17%. And as we've talked about, we're looking at roughly that $78,000 to $81,000 level, so something like 15 to 18% to the downside, and it's still in a relatively strong position. ETH is not doing much to help its cause. It is really not doing anything here in terms of bounces, roughly 9 or so months down. It's 45 months since the May top in 2021, only went marginally higher in December and then September 22, and it's basically been down for 45 months, which is the same time frame that it did from March 2017, massive peak, and to the higher low in December 2020. So it's doing everything possible to make this the worst possible run for Ethereum. I cry inside but laugh on the outside with ETH. 8 weeks for the ETH price is where we sit from the top, and each of these moves have been 21 weeks or 22, something like that. Low to low, 21, low to high, 22, high to low, 26, slightly longer here, but 22 again, low to high, high to low, low to high. So you're getting this rough 19 to 22, on average there, about 21 to 22 week move. And right now we're only 8 weeks down. So if we take a 50% of this, you're at end of Feb, maybe the first week of March for some sort of low if we're doing 50% in time. Ideally, it continues to hold above that for any sort of strength here. Otherwise, ETH is in a little bit of trouble, but XRP, not as bad. 47% down here. It's still underneath the $2.60, which is a key point here, the 50% level. Otherwise, if Bitcoin starts to move down, you've got to start looking back at around that $1.80 level as well for any sort of signs of strength. And we can cross the percentages, the next levels down in a future video. Looking somewhere down at 140 if it goes past 180, okay? Sui looking a little stronger here than the rest of the alts. XRP also one of the stronger ones. But in terms of Sui, it's not the bounces aren't really too strong. So it has moved up to 350, back down to 326. It's done this multiple times on the way down over a 131 day period. Bounces and fades, bounces and fades, bounces and fades. Each of these dumps could be 20%, rises and dumps 30 or 40% again. So yeah, it hasn't really done enough to hold the ground here. It is above 290. We'll see how this plays out in the next few videos. And then DOGE on the monthly chart here is below the 50% level at 25 cents. Still holding above a lot of these swing tops, major swing tops at 16 cents and 17, 18 cents, and the last one here at 23 cents. So it has done a few decent moves to the upside, is holding some key ground here. I think things still need a little bit more time to play out, which is why I'm talking about the probabilities of a crash continue to increase, especially as I look at the rest of this data here that's not really turning around just yet. But it doesn't mean that the macro is over, as I went through with the traditional market. So some serious, strong strength in the background. Don't go anywhere. Like, subscribe. We have the 100K challenge here with Bluffin, link in the video description. And check out Michael's video that's coming up next. He's looking at the current and historical FOMO data for Bitcoin versus USD. Go and check that out on his channel ASAP. I'll see you guys back here at the next video. Thanks for hanging out with me for the last half hour, and I'll chat to you again real soon. Peace out.